if you can't get the physical anywhere else, what are you going to do? You're going to go after it. And to be honest, even if it was higher priced, they'd still come after it. And conversely, as we drew attention to during the whole of 2025, now this is important, the PBOC is building a massive silver stockpile, which is built in sufficient size, alongside gold, obviously, to be able to convert physically backed SGE silver into a high quality liquid asset equivalent. And remember, we talked about that and people couldn't really get the idea. How can silver be a high quality liquid asset? Well, if it's contained in a physically structured environment where to buy and sell it, you have to own the physical, it does by default. When all is said and done, it is essentially becoming a high quality liquid asset, which is ultimately now in the crosshairs of being collateralized as the people's money. And just like the PBOC opened gold as money to its citizens in 2010, and then regularly opened it up in further and further layers down the line to everybody, even from when it used to be like just bars. We had, do you remember the big house-sized billboards in 2010, buy gold? But it was really aimed at the wealth. Then, as over the years, they've opened up gold to more and more and more people. Well, just like they did along the way with gold, ultimately, they're opening silver up as money. And ultimately, it means that 1.5 billion citizens will be sanctioned to use silver as money. This is mind-boggling stuff. What's the price? Well, I don't know. I mean, who would know? But I suspect it will lower the gold-silver ratio to historical levels, say 15-1, and with $8,000 gold pretty much assessed by the majority of our liquidity providers, that puts silver at plus or minus $500, well above the current inflation-adjusted $230 per ounce, which we referred to last time. So in summary, it's the golden yuan that's turning the gold and silver vaults in Shanghai, Shenzhen, Hong Kong, upcoming vaults in Singapore, Africa, Saudi, and the inevitable full BRICS expansion into the epicenter of a new global monetary system. It is just the commencement of the expansion of a gold and silver trading and vaulting corridor where high quality liquid gold and silver assets are able to be employed as institutional collateral. Ballooning physical gold liquidity is increasingly competing with sovereign bonds as an alternate tier 1 collateral. Now, these high quality liquid asset gold investments are being aggregated in the expanding SGE gold and silver corridor. And as a result, gold is set free to operate as institutional cross-border liquidity. Now it's dawning on the US Treasury that silver is also about to be monetized. It's time for the shorts to get out of Dodge. And what Trump has underestimated in his war on BRICS, it isn't that the 100% physically backed global facing BRICS gold hubs feeding into this golden yuan and the 40% backed payment channels are seeking to replace the dollar. They are not. It's simply that gold provides sufficient liquid, unimpeachable, high-quality liquid asset collateral that enables central banks, sovereigns, and global institutions to replace high-risk treasuries for financing, hedging, repos, etc. Think about now silver. When you're certain that you have a price based in yuan, which is convertible into gold, and now you've put silver into this same corridor, it is a mind-boggling thought. And these are the extremely liquid macro drivers that we've kind of been going through that will evidence both gold, physical gold, and silver to reclaim their global monetary status. It's going to happen much, much faster than anyone's thought. And this is just one reason, and I'm sure it doesn't help that we've got global geopolitical uncertainty, tariffs, one thing and another, really accelerated the process, which has been in place for a long time. It's going to happen in 2026. And this is just one reason that underpriced gold, sub 8,000, and why silver is too cheap under current inflation-adjusted $230 levels, both are going to require those levels of additional dollars to be printed to reach the next equilibrium staging post to rally from. So it's just going to cost a hell of a lot more dollars. It's not that gold or silver is going up. It's just now acting as its true money benchmark. How much more debasement really depends on the pace of dollar and related fiat debastements that we experience from here on. So it's really the pace of it will be determined by that rollout. And to put the current short-term paper to physical debacle into context, toxic derivative funds have absolutely nothing to do with the SGE physically backed exchanges, which really annoyed the PBOC. And the SGE exchanges have been concurrently been bid all the way along at a premium as high as $30 per contract into the extremely aggressive 100% derivative driven selling. I mean, this is mind-boggling stuff. Now, these toxic gold and silver derivative structures had been technically, as we said, hedged against a virtual COMEX derivative benchmark. So indirectly in the sense, but benchmark to it. And when Chinese regulators stepped in to shut down these derivative structures on January the 30th, it immediately ignited an unprecedented global derivative doom loop, which is what we were witnessing. However, as we reported, liquidity providers had assessed the synthetic condition was likely be structurally exhausted by the Friday session close. And while the bid-ask spreads are actually still elevated even now, as we will look at shortly, this looks to have carved out a strong bottom net of speculators to rally from. Now, in fact, what I'm hearing is that the PBOC was very, very unhappy. I was going to use a stronger term, very unhappy about the leveraged, unbacked, disruptive volatility, and has tasked the regulator, their own regulator, to put stronger position limit structures in place alongside raising margins to as high as they deem necessary. And what they want to do was tame this sort of futures disruptive volatility. It goes against what they're trying to achieve. Could it be that they raise it to 100%? Yeah, it is entirely possible to come in line with the SGE physical market. But and that's something we've slowly been evidencing in the US futures markets. But that is been for a completely different reason to the SGE. And while the SGE is loading up physical into shortages, the reported US derivative positions are completely bereft of any physical backing. And the SGE physical silver breakout has exposed a massive deficit in COMEX positioning, which is coming into the SGE crosshairs for delivery. Now, here's what really ticked off the PBOC. Widely disseminated reports that billionaire Chinese whale silver short trader through his brokerage Shanghai Futures Company, he was controlling 450 tons, 30,000 short contracts of silver. And halfway through the sell-off, deliberately leaked that information out, which is what you see sort of being published here, to further spoof the market makers and to dissuade longs from buying into the deliberately spoofed dip. And these directional short bets were benchmarked against around a $30, $150,000 per contract, lower priced COMEX futures market, where they had some client relationships active too. And so into which on Friday, liquidity providers reported that CFTC regulators were also investigated related spoofing insider trading footprints emanating from pre-placed related these ZFC client COMEX short SI long and OPEX put bets. So they basically had these short bets in silver futures, and also they had bets against the long side of futures, as well as placing put bets that the price would drop. Now there, it's almost, I mean, we've seen that in the past when you had, like, for example, 9/11. There was a sudden amount of puts the day before it. Well, they were all unwound because it was realized an event was happening. Therefore, they neutralized all of those and also used that trail to go after people. But again, that is exactly, although it's not of that equivalent, this is just one of many, many rinses, but it was generated in China, and that really annoyed the PBOC. Now, given this massive, unhedged, concentrated Shanghai Futures Company short position has also impacted a regulated US exchange, the CFTC and its Chinese counterpart, the CSRC, are looking into this proxy relationship. For its part, the CSRC is enforcing an unwinding of futures position concentration that dwarfs dwindling silver exchange stocks, so way in excess of what was even in the exchange. Well, that's not unusual for as we know in the COMEX, because we regularly see huge imbalances like that. But this was not anticipated. And once it was caught, they really started to slam down on that position. And that's ultimately going to force a short squeeze against these unbacked leveraged futures bets. But they don't want to do it the other way.